You're watching Investor Insights, and in this video I'm going to take some time out and tell you a story. There's a company years ago, it was called Enron, and this company got to where it was by cooking its books. A lot of people lost their money. A lot of people that worked for the company not only lost their jobs, but lost their entire super. Over there it's got a 401k, because the company told them to invest all their retirement savings into company stock. The government the regulators subsequently made rules about investing your retirement funds into company stock. It must be a real heartbreaking experience for those guys to be the ones that have to set this precedent. But it had to be done one day. But getting back to the main theme of Enron, one very funny moment came when at an analyst meeting, in a room packed full of analysts and journalists, the CFO was there, obviously, and one of the journalists stood up and asked a question, a very simple question. "Excuse me, matey, how do you make your money?" That was the gist of what the question was asking. And you know what the answer was to that? The CFO actually said, "I'll have to get back to you on that one." This is not a joke. Imagine asking a chief financial officer of a company how his company makes money. And not only does he have to think about it, he has to get back to you on it. At that very instant, if I was a shareholder, if I was a worker that had all my retirement savings put in company stock, I would be so quickly out of it, and there wouldn't be any word to describe the speed at which I would execute that trade. The company was so rotten in its manipulation of its balance sheets, hiding its debts, booking forward orders, unfulfilled forward orders as part of its income, as part of its earnings. It's something which is inexcusable, totally unethical, and it was solely to fatten up the pockets of the management, who obviously were shareholders. The culture of the business was looking at the stock price and how high it would go. The mentality of a company should be to grow your business by hiring the best people who are willing to put as much effort into the business as the next person, and try and obtain growth by proper means. You don't need to cook your books. And as your earnings grow, as the company expands, the stock price will rise accordingly. You don't need to cook your books. But these guys needed to do it in a hurry because they wanted money fast, obviously. So So where am I going with this? What if I told you that Enron used subsidiary companies in which all its debt it shoved into? I think those entities were called spiders or something like that. But anyway, it hid all its debt into these little shelf companies, drained them, let them fail. But it retained all its earnings. So imagine having a company structure where all your debts and any other crap you would shove onto these subsidiaries, and you kept all the good stuff and all the earnings, which you were cooking anyways, cooking the books. And this went on for a few years, and then it all imploded, and the stock went to naught. Well, one of the main people who were ringing the alarm bell back then, his name was Jim Chanos, and he's a notorious bear. He runs a company that translated into, I think it starts with a K something. I'm sorry, I'm tired. But Kennecos or something like that, sorry. But translated into English it meant skeptic. And he was skeptical. He looked at the balance sheet, didn't make any sense. Looked at the business model, didn't make any sense. Looked at its subsidiary structure, ridiculous. So he was amongst the first and only people to short this stock. This company was number 7 on the S&P 500 at a time in terms of income, or pretend income. Again, you may be saying, where's this heading? Well, would you believe that there is a company in our own country which has got the exact same business model as Enron? Now, I never said that this company cooks their books. So in the event that I get a phone call tomorrow or whenever, and there's a lawsuit happening, I'll just pretend I'm drunk right now. But in essence, this company's got the same corporate structure. All its income goes into the main corporation, the main business, and all its debt and all its crap gets shoved into all these little subsidiaries. Which company am I talking about? It's not some small little rubbish penny stock. It's Macquarie Bank. I didn't think of this. It was Jim Chanos. And he was amazed that after all these years, after Enron, that there would still be companies with the same structure as Enron alive today. Now, Macquarie Bank has a lot of little subsidiaries. No, they weren't like the spiders of Enron. They've got a different name. But their purpose is the same, to hide debt. Macquarie calls them little trusts. So you look at, for example, Macquarie Airports, Macquarie Communications, Macquarie Infrastructure. And this goes on. All those companies, all those subsidiaries take on all the debt of the company, and the company drains these little subsidiaries out. Now, years ago, for some reason, Sydney Airport, Sydney Macquarie Airport Trust, decided to actually split from its head company. Amazing. I didn't see it coming. But then again, Sydney Airport is a big entity. And this trust was going to make money in the long term. So instead of being folded up, drained and liquidated, it did the right thing by its shareholders. It just went off on its own. I'm sure there's still some ties with the head company, but it's no longer just a subsidiary that's being drained and have more and more debt piled into it. And actually, talking about Macquarie Airport, whenever you value an asset, you've got to look at, its tangible value, like the value of the property, the value of the assets, the terminals, the parking, everything that's on it. And that's what most sane businesses do. So when the government put Sydney Airport up for tender, everybody came in, put up their bids, and I remember off the top of my head the bids were, and this was 13 years ago, the bids was something like 2 billion, 2.5 billion. And then came Macquarie Bank. They bid 5 billion. They didn't just beat the highest bid by, $500 million or $1 billion, which most normal people do. These guys just came in and they paid double what the highest bid was at the time. So they paid 5 billion. And you guessed it, they funded it through debt. Now, when Macquarie was asked how it came to working out the value of this asset, this whole airport, they gave out this answer which sounded just like the Enron CFO saying, I don't know. And the Macquarie methodology for working out the value of its assets is simple. It's because they said it was so. I shake my head. I don't have anything better to say than that, or to do than that. This is very similar to Joanne Lee's, that backpacker woman who murdered her boyfriend, or technically no, the law said that, the court said that she didn't do it, but obviously she did. Because when they found this truck apparently that she was held hostage in, she said that there was a little gap between the front cabin and the back. They searched and they searched and they said, well, how on earth did he shove you from the front of the cabin to the back of the truck? And the Joanne Lee's answer was, well, it happened to me, so there must have been a hole there. The truck was there. There was no gap, no door, no nothing. All she could say was, well, it happened to me, so it must have happened. There must have been a hole there. Macquarie Bank, how do you value your this airport? What methodology did you use to come up with the number 5 billion? It's 5 billion because we said so. Makes you think, doesn't it? That's why to this day Macquarie Bank is still lingering. I think it's in the $30 range or $40 range. It topped out at 100. You'll never see 100 again. I can't believe companies get away with basically murder. But this is another lesson to teach you that just because a company is big and famous doesn't mean it's unfallible. It doesn't mean that they do the right thing. And it certainly doesn't mean that it's a good stock to put your money in. I think there's something in that for all of us.